We're going to calculate the stock price for PBF Energy using prior financial information. And first we need a market cap, which is 1.28 billion. I entered that already. Which is right here in Google Finance and Yahoo Finance. And then we need a stock price of 1070. Which means they have 120 million shares outstanding. And to calculate that, it's market cap divided by stock price. Next, we need the free cash flow. And in Yahoo Finance, it's conveniently in the cash flow statement already calculated for us. And the best way to figure out the value of a company is to estimate future free cash flow and then discount that number back to today's dollars. Next in the model, we need net income, which is the profit for the company, and we're taking 4 years of net income. And then last we need is revenue, which are the sales by year for the past 4 years. And it's always good to look at the numbers that you input just to see how they move over time. And it's nice to see that their revenue has pretty much gone up, although it came down a little in 2019. And the next step is we need to look at a capital structure of PBF and figure out the discount rate we need to apply to the future cash flows. So in the income statement, you could find the interest expense, and that's the interest this company pays on its debt. And let's see how much debt they have. We'll go to the balance sheet, we'll go to liability section, and then no current debt. Let's see, long-term debt of $2 billion. That's debt that's due after 1 year. That's a high interest rate. Oh, they must be a risky company. 7.91%. They got pretty bad terms. Let's just double check that. Interest expense, 159. Yeah. And interest payments are tax deductible, so we need to find out the effective tax rate. So let's see the income before tax. And the income tax. So they pay 21% in taxes. So the cost of debt is actually 6.19%. And you can see the weight in debt is 61%. And the weight in equity is obviously 100% minus that, which is 39%. So it's highly leveraged company, which can be a little risky. So I would expect a pretty high beta. Let's see the beta. That's a really high beta. Anything over 2 is volatile. That means it moves almost 3 times the market. So the cost of equity is 23%, which is so much higher than the cost of debt at 6%. Because equity is more expensive than debt because equity sits lower on the capital structure of a company, therefore it's more risky. So in the event of a default, debt holders are paid before equity holders. Now 12.89% is the price PBF pays to obtain financing. So PBF needs to generate above that percentage in profit a year to add value to its investors. So that's a big hurdle, 12.89%. And if it isn't able to do that year after year, it will eventually go bankrupt. So it's something to think about. But this is what we have to discount the cash flows by, the WACC. So let's go see what the results are. We calculated the free cash flow based off of the historical information, and we also calculate terminal value, which is all future cash flows. And then we discounted those numbers back to today, and we calculated the value of this company at $646 million. And when you divide it by 120 million shares, it's a calculated stock price of $5.40, and it's trading at 1070. Let's see the historical stock price. So it was trading even higher a few months ago before Corona, and way higher like last year. So it's been trading at a premium for a while. So stocks can trade higher or lower than intrinsic value, as you can see here. But the stock price is predicated on supply and demand of the market, not what it's worth. It's what people think it's worth. It's a lot harder to value a company that doesn't have consistent net income also. So you have to use your judgment whenever looking at models. Because when you do some research, you'll find analysts say buy PBF, and you'll see other analysts saying sell PBF. It's like that with all stocks, it seems. Each analyst uses their own model and their own unique assumptions, but you never actually see the model. This is my model, in my opinion. So I hope you liked the video. Thanks for watching.